Good evening, everyone. Welcome to Closing Comments here for February 5th. Let's jump right into our charts and see what happened in the market today. First up, we got our April live cattle on the board. Did see a big breakdown here in the cattle market today. Prices flushing lower on some heavy volatility. After yesterday's rally up here into new yearly highs, we did see that late breakdown finishing the day. The prior day action right here, right around the lows. We did see that prior day's low coming in right here around 241.32, which was the line to defend here for the bulls. However, they didn't get much of a chance to do so today. Prices opening up here at 240.42 and immediately breaking down with a gap and go. Nearly a $6 opening range today. Price did stabilize briefly between 237 and 238 before the bears pushed into the close here and finished the day right on top of that bear pivot. Pretty heavy volume selling today with this market breaking down off of a near-term high. Could just be coming off of some oversold levels here and coming back into the major moving averages to find more support. Also had pretty considerable breakdowns across the general stock market and other commodities today, so it could just be a wave of selling as people are taking off some risk. We do still see this big picture uptrend remaining intact. Prices still trading above this 20-day high here at 231 and a quarter. Also above this 50-day moving average here. So we still do have some good chance of support here, anywhere between 231 and a quarter and 235. However, we do want to be respectful of this volatility we saw today. Don't be stepping in front of this thing. We want to see this market kind of balance out and stabilize here before we commit to any new long positions. In the meantime, now's the time to be cautious and a little bit defensive as we head into the last trading session for the week here tomorrow. We want to just be patient, let this market balance out, find either some support here on this 50-day average or somewhere down here into closer to this 20-day low. However, I just want to make sure that with offers down here below 235.60, we could see that selling pressure also continue to increase here down towards that 20-day low, and a finish down here below 231 and a quarter would push us back into some bearish territory. So we just need to make sure that the bulls are able to come in and offer support to this market here over the next couple days and into early next week. In the meantime, the big picture uptrend still does remain intact. We just want to see how the bulls respond as we get back down here into the low 230s and see if they're able to stabilize this market and keep pushing this thing higher. Next up, we got our March feeders on the board. Also seeing a pretty big breakdown in this feeder market today. However, the relative strength has kept this feeder market stronger. And we did see this market still trading above the 20-day average today. We did see a $7.50 range as it did break down below that prior day's low, though, coming all the way down here before bouncing back up and finishing the day around 364.5. Like I said, relative strength in this feeder market has kept it trading above the 20-day moving average since back here in early December. So this market is just pretty extended here at the moment, so a little bit of selling pressure here and coming back into support. Could be a good thing to cool off this market for a minute and pick up some buyers at some better prices. However, like that live cattle market, we want to be respectful of this volatility here today, so we want to just encourage everyone to be patient and let this market stabilize before committing to any new long positions. In the meantime, let this market kind of balance out and stabilize here anywhere between our major moving averages. The current 20-day low is sitting down here at 353.35, so we want to make sure that as long as this market can remain trading above that, we are still here in bullish territory. Also, we have that rising 50-day moving average coming in here, so we do have a little bit more forgiveness here in this feeder market, but we still could see some big wide ranges and some volatility stick around for a minute here. Wait and let this market stabilize before committing to any long positions. We'll monitor that over the next couple days here, but let this market kind of finish out and see what kind of action we can look forward to as we head into next week. And our March corn futures on the board here. We did see a pretty big rally here in the corn market today. Prices did drive back here above that 435 level and closing above that 50-day moving average. We still could see a little bit of resistance up here as we test some of these prior swing lows. But as long as this market is trading above 435, that keeps us potentially in this range between 435 and 455 we had been in over the last couple months. As long as we're trading above 435, look for those sticky range bound action to continue. But if the bears are able to keep a cap on this thing with today's high and try and play some defense here around this 50-day average and these prior swing lows, we could see this market try and head south a little bit here still. Just going to be have to wait and see how this market finishes up for the week. If we close above or below, that will try and lead us the next direction as we head into week 6. In the meantime, let this market kind of figure out what it wants to do here around that 50-day average and prior support that has now turned resistance. Crude oil prices also selling off a little bit here today, taking back most of yesterday's gains, pushing down here towards 62.5, which we have already seen a little bit of support here in the evening session tonight. As long as this market is trading above 62.36 and that 200-day moving average, we could see this market just continue to bounce level to level here. We don't have a whole lot of upside potential here. We still could see a little bit of volatility, and if we do drive back here above 66.5, this thing could poke up into the 70s. But in the meantime, looking like this thing is already starting to cool down here. Look for the pressure to come down here on 62.5 and see this market kind of fizzle back down here into the 60s. But in the meantime, we could see this thing continue to go level to level here for a minute. But at the moment, we still just need to see how this week finishes up here as well. Just a lot of uncertainty here in the market, and we want to make sure we see how this week closes around some of these key levels. And last but not least, our equity markets seeing a nice flush to the downside here today. We did see the S&P breaking down below this prior month's low, right here around 68.15. This is now pushing us into bearish territory, so I encourage everyone to start to get defensive, pull some money out of the S&P here, and we could see a little bit of downside or at least a little bit of a corrective move. This market could see some more volatility over the next couple days. The Nasdaq did break down below that prior month's low here right around 25,000. Within the last couple days here, we did see that probe below it, and then today's close finishing decisively down here below that level. So this is definitely seeing considerable weakness in that tech sector, so I want to be cautious and stay away from this tech sector. Could see continued volatility there and downside while some of those mega cap names sort out some of the mess they got going on. In the meantime, though, the Dow continues to show good relative strength, still trading above the 50-day moving average. We want to see this market continue to hold above this 48,500 level and the current year's opening range. As long as this market is able to find support down here, we could see some good value areas to buy. But here, if we do have a nasty finish here for the week and the Dow comes down here below this 20-day low at 48.5, we could see some weakness creep into this market and see some more extended selling into some of these stronger sectors that have continued to show some good upside. So just want to see the Dow continue to defend those levels, but we are seeing some weakness here in these other indexes, indicating this might be time for a little bit of a corrective move and at least a time to start to be defensive and raise some cash here while this market sorts out some of this volatility. That's all we got for this week. Thank you everyone for tuning in. We will catch you over the weekend for our Week 6 Market Watch. Everyone be safe out there as we head into the weekend, and let this market kind of sort it out as we head into the weekend and get a new fresh start in Week 6. Thanks and have a good night.